if you think about it as just a stopwatch in the sky, which I've put in over here in small text, Jupiter-Saturn cross happens 4 times in an 80-year cycle. So it happens every 20 years. Does the tail wag the dog or the dog wag the tail? Is Jupiter and Saturn that's causing this, or is Jupiter and Saturn is just a stopwatch in the sky that shows us where we are in the cycle? However you plan on looking at it, that is how you can look at it. But I just put that here so you can see how it connects. So I'm going to talk about the cycles cheat sheet. So if you go on the blog, it's the second blog now, 10 market cycles explained in one new infographic. And I'll start with sort of the background as to why I came up with this. So if you go into the library, in the images and more videos, there's this cycles broken down sheet, which is basically this. This has been on TRI for a while. You've probably all seen it. And this is what inspired the creation of the full cycle cheat sheet. Because I know the center circle here is the seasonal cycle. And Brian always talks about the seasonal cycle. And we always end up having to go to the sector rotation and seasonality sites and all these different sites that show the markets. And I felt like this image didn't quite do it justice as to how complex and connected these cycles are all together. And personally, I didn't understand it. I didn't understand how the cycles connected. So I made this to kind of help me and to help you guys understand the cycles a little bit better. The way it works is on this sheet, there are 10 market cycles. So a few more than you've got on the original one, just a little bit. And in the middle, you've got the seasonality. So in here, you can see the circle right in the middle is the seasonality. Here, that's this whole section here, this seasonality. So I've gone over to, who are the guys that make this seasonality thing? I'm not sure. Let me scroll down. It's these guys, whoever does these bits, these things. So it's these seasonality charts that I've seen. Equity clock, that's the one. So if you go to equity clock, you'll find all the originals and all of the markets that have been put on here. So I only managed to fit 20 on. But I always found it hard to understand this in sort of the yearly picture and connect it with the other cycles. So that's kind of how this begun. And that's this seasonality section right in here. So you can see it's just a pie chart basically of the year with the winter, the spring, the summer, and the autumn, and you can see exactly where everything is. So for example, right now we're in June, and we can see that, at the end of May or in the middle of May, you can see all of these different sectors come to an end. Real estate, crude oil, energy, the S&P, all of these, the orange one, industrial. So all comes to an end. So that's kind of made me think maybe that's the sell in May and walk away idea, where all these strong markets are coming to an end. So it makes sense that everyone's going to get out of them. And also funny, Brian was talking about the technology sector, how technology is very strong right now. And that makes sense with this seasonality study too, because look, we're right into this technology strength period. So you can see the technology over here starting on the 15th of April and coming to the 17th of July has a strong window. So this is how you read the chart. You can see that it's the 17th of July coming at the end, and gold will start its strength 27th of July and end its strength the 10th of October. So that's kind of how the seasonality section of this thing works. And going inwards, it's a lower and lower time frame. So you've got the weekly over here, with Tuesday to Thursday being the best trading days and Monday to Fridays being the worst trading days, unless you have a specific setup that is around those days. And then Saturday and Sunday is obviously not trading days at all. And then further inside, you have an even smaller time frame of the actual day. And this shows the kill zones of Tokyo, Sydney, London, and New York, the biggest exchanges. So you can see where these exchanges have their kill zones at the first and last hour, of course. So this is kind of ties into level one. And I thought, this would be helpful for level one sellers. And the next thing that goes out from the seasonal cycle is the business cycle, business economic cycle, 5 years and 10 years. So an economic cycle is kind of 2 business cycles, and then a demographic cycle is kind of 3 economic cycles. It gets a lot less connected the further out you go. And there's a lot less information the further out you go here. So you can see here the market cycle and the business cycle, they are kind of the same, with the economic, and they're connected with the sector rotation stuff. So I'll show that in a minute. And then the economic, generational, money cycles, I've also put those on the chart. And actually, when I made this chart, this was the first time I was convinced about the Jupiter-Saturn cross and Pluto-Saturn cross and all these crosses, because I never understood how it connects. But if you think about it as just a stopwatch in the sky, which I've put in over here in small text, stopwatch in the sky, Jupiter-Saturn cross, happens 4 times in an 80-year cycle. So it happens every 20 years. So that just makes you, does the tail wag the dog or the dog wag the tail? Is it the Jupiter and Saturn that's causing this, or is Jupiter and Saturn is just a stopwatch in the sky that shows us where we are in the cycle? So however you plan on looking at it, that is how you can look at it. But I just put that here so you can see how it connects.
How
But the
else
market
do you
and the
explain the absolute stupidity of these humans through this event, though, eh?
Yeah,
I mean, they
totally.
just
But
act
that's what I'm
just
saying. Is it the
dumb.
stupidity of the humans that is causing it, or is it and it just ties in with the timing, or is it the timing that's making humans act stupid? That's the thing. So I don't think it matters really. The fact is, it's happening, and we can see it. And that's what's important. So coming to the market and the business cycle, I've explained all this in the blog. But if you wanna read a little bit more in the blog, I explain more of this in the blog. This is this section here. So if you go to stock charts, they talk about sector rotation a lot, and Brian shares this chart a lot in daily briefs and in the shows. It's basically this chart over here mapped into a circle. So let's go back to the full cheat sheet. You can see the market top. It just leads before the full recovery, and we're going clockwise here. So market top leads full recovery, and the business cycle has 6 stages in it. So I've cut this four quarters of market top, bear market, market bottom, and bull market into 6 business stages, where 1 starts down here at the market bottom, where bonds start rising, and stage 2, stocks start rising. Stage 3, commodities start rising. And then in stage 4 of the business cycle, bonds start coming down, then stocks start coming down, then commodities start coming down. So that's how the business cycle and the market cycle are connected. And the way you know where you are is you look at this key over here. So let's take one of the top ones. In the early recovery section, you can see that CE, which up here, business cycle key, it shows CE, consumer expectations. CE should be rising, industrial production should be rising, interest rates should be bottoming, and yield curve should be normal. If all of that happens, you know we're into early recovery. And then that will tell you what's coming next. So market top will be coming next, and then a full recovery will be coming. So right now, if you look at where we are kind of in a falling consumer expectations to reviving consumer expectations. It's industrial production. We've gone from falling to bottoming, so we're kind of in this stage. We've got interest rates that are peaking, so that we've just kind of had that, and now we're coming off. We're pausing, so I don't know if we can say that they're falling yet, but I think we're kind of in between here. And the yield curve is currently inverted. So when we start heading into normal yield curve, then we would have really hit the bottom. So we're kind of in this phase down here in the that's how I see it in the market and business cycle. We're kind of down here. So that's the market and business cycle. You can see I've squeezed in the Bitcoin and emotion cycle as well. And that's based on this Wall Street cheat sheet right over here. Because I noticed that the business cycle, the Bitcoin cycle, had like a 4-year cycle, and the NASDAQ cycle as well was kind of a 4-year cycle. And it's very similar to the 5-year cycle of market and business. So they're very closely connected. Not quite the seasonality, which is 1 year. It's just closer with 4 to 5 years. So the Bitcoin one, we know the cycle because we have a clear halving, right? So the halving kind of sets the expectations for the rest of the cycle. And we know that just before the halving, we have the bottom. Before that, we have the hangover, which comes right after the blow off top, which comes right after the consolidation, which happens right after the halving. So we know that that's a clear cycle. And then we know that the emotion cycle, based on the NASDAQ cycle, you can see this over here, the peak of whatever that's a peak of maximum financial risk, and the trough, the point of maximum financial opportunity. The color scheme, I've also included the color scheme into this color scheme of the emotion cycle here. So in the red is capitulation, And then the green is optimism, belief, and thrill. So you can see in the market cycle where the market top happens over here, you actually get in the emotion cycle, the blow off top and the thrill and the euphoria actually happens after the blow off top. The market has its top, and that's when everybody piles in with their euphoria. And that's already too late. The market's already going to crash. And then by the time it comes down here, they're panicking and getting out and capitulating, but the market's already at the bottom. Overall, that's how these cycles kind of connect. Why this is sort of valuable is this is sort of a reference tool for cycles. It's sort of an education source, upgraded from this kind of cycles chart, which doesn't give too much information, but it gives the basics. So it's an update on that. And it's a reminder, if you want to come back in here every month, you can look at what seasonality should be strong, a reminder of the kill zones if you're a day trader, or if you're taking a trade on the day, you're a swing trader, but you want to time it just right. Or if you're investing and you want to know, where in the cycle are you, and should you be investing in technology or real estate or materials? And in general, where are you in the cycle? In the blog itself, I've added more details about these charts that Brian has given, a little bit about Wyckoff and that kind of cycle, how that connects, how the money cycle is driven by the interest rates and the interest cycle, and how the long-term fear and greed cycle as well is connected to that as well. So to connect them together, I've got this little chart that Brian requested that I put on just to give you a visual of how these cycles work. You can see the debt money cycle up and down over an 80-year period, whereas the business cycle is a 4 to 5 year. Let me zoom in on this. 4 to 5 year cycle, go up and down over these 4 to 5 year periods. And there's can be a lot of overlap. So while we're in an up phase of the debt money cycle, if we're in an up phase of the economic and the generational and a business cycle, then you're in a strong bull market, and same goes vice versa. I've made this chart, but I don't fully understand what's in it. I'm not a newbie in this game, but I consider myself a newbie still, so I'm still learning this. I haven't been through a full economic cycle myself. I've barely been in a full business cycle, just about being in a full Bitcoin cycle. So I'm so extremely new to this and learning as I go. But this is going to help me, and hopefully it helps everyone else. In terms of the links, in the library, it is in the cheat sheet section. The market cycles cheat sheet right down here. And the original one is here, cycles broken down in the images and video. So it's just in the miscellaneous link section, the cheat sheets and images.